And then we're going to go over information on the Excel spreadsheet. So I'll have two different times of going through. So we're going to talk about, first thing, what a cost accounting system is. A cost accounting system records manufacturing activities in a perpetual inventory system which continuously updates the cost of materials, goods in process, and finished goods. Now we're going to go into some terms on and what they mean as far as it pertains to your class. Job is a special order for a custom product. This would be akin to going into Hibbett's and getting them to make your team a set of custom hats for your baseball team. Job lot would be the same thing as I just discussed with job. It would be getting a bunch of the same thing made custom-wise. Job order production is the production of products in response to special orders. 3 steps to it: predict the cost to complete the job, negotiate the price and decide whether to pursue the job because it may not be beneficial to you to pursue it if the price is too low, and 3, schedule production of the job. Once production is started, managers monitor the cost associated with the final product by monitoring the cost of the job sheets associated with the product throughout its production cycle. I'm going to scroll up here. 3 types of costs are generally associated with the job sheets that follow a product from raw materials to goods in process to finished goods, and finally to its ultimate destination and cost of goods sold. These 3 costs are direct material, direct labor, and factory overhead. Direct material is the materials that are used in the direct production of the job. Direct labor is the labor that is used in the direct production of the job. Factory overhead is made up of indirect material, indirect labor, and factory overhead. Indirect material would be cost for, say, the maintenance department to come in and clean the floor after your job's been being done. It's not directly related to the cost of manufacturing your job, so it's considered an indirect cost or an indirect material. Same thing with indirect labor. The maintenance staff who does the work of cleaning up afterwards, this would be considered indirect labor. And then factory overhead is basically the costs that are associated with owning the factory: utilities, the administrative and supervisory personnel needed, just basically the things that you need to keep the factory running while you're doing those productions. These are items that are not directly used in the production of the job, but are estimated and assigned as a calculated cost to every job lot. Up here I have something in bold. One very important thing to always keep in mind is costs can change depending upon what the cost object is. What this effectively means, depending on what you are considering your cost object, a cost can go from indirect material or indirect labor to direct material or direct labor. As an example, the maintenance department that I've been talking about. If your company produces cars, the maintenance department materials and labors would be considered indirect costs. However, the maintenance department is your cost object, and the materials and labor used by the maintenance department become direct materials and direct labor. This is done so it helps you in making decisions, because remember, in management accounting, we don't have to follow GAAP. What we can do, we can base our decisions based off whatever metric we decide to come up with, and these are some of the ways that they are done. So we're going to talk about your cost flows. During production, while a job is in process, all of its accumulated costs are kept in the goods in process inventory. That means direct labor, direct material, indirect labor, indirect materials, factory, which are all included in your factory overhead. Those are all accumulated in the goods in process inventory. Now, cost flows. Once the job is complete, all of the accumulated costs of that job are transferred to the finished goods inventory, where they will stay until you actually have a sale and the delivery takes place. When a finished job is sold, All of its accumulated costs are transferred to a permanent file associated with the total cost of goods sold. Now this comes off of your sales, which would then give you your gross profit margin. Overhead allocation base. Overhead is generally allocated by linking it to some other factor used in production, such as direct labor or machine hours. This linkage is known as the allocation base. Overhead allocation rates. We cannot wait until the end of the period to allocate overhead to jobs, so we must estimate overhead in advance and assign it to jobs so that a job's total cost can be estimated prior to its completion. And here I have in italics how you would figure out your overhead rate. You take your predetermined overhead rate, take your estimated overhead cost, divide it by its estimated activity base. So say you had $100,000 here as your estimated overhead cost, and then you had this as 1,000 hours of estimated as your 1,000 labor hours. So you would have a cost, like I said, direct labor, estimated activity base, 100,000, estimated overhead cost, 500,000, predetermined overhead rate. In this instance, the predetermined overhead rate would be $5 per direct labor hour. So that meant for every one direct labor hour that you assigned to a job, $5 of factory overhead would be allocated. And here I just go through the math. 100,000 equals the direct labor hours, which equals your estimated activity base. Thus your overhead would be allocated at a cost of $5 per direct labor hour. Now, factory overhead over or under. Very rarely is your factory overhead applied exactly, but this will not be known until after the job is complete. That means it's a historical look back. And because we're trying to plan for the future, we have to allocate our costs to what our historical knowledge has told us is usually the best way of allocating it. So actual overhead is greater than the applied overhead. That means that overhead was underapplied and the factory overhead T account would have a debit balance. The journal entry would look like this. You would have a debit to cost of goods sold, which means that cost of goods sold would increase. And then your factory overhead would have a credit, which would reduce the debit balance of the factory overhead account. Actual overhead is less than applied overhead. Then overhead was overapplied and the factory overhead T account would have a credit balance. The journal entry would look like this. Factory overhead would be debited and cost of goods sold would be credited, which would effectively increase your profits because that meant that you applied more overhead than what you thought you were, so you got paid more. The problem with this sounds like it's a great idea, but the problem is that eventually competitive prices are going to put you out of business because your prices are not going to be considered competitive if you're over applying overhead. So those are going to be the main topics that we discussed in chapter 15. So I'm going to go ahead and close this document and I'm going to open up an Excel worksheet that I have. And what I've got here is basically kind of a demonstration of how we're going to show how the costs move through the different T accounts that are associated with it. So over here we have 4 jobs. We have 100,000 hours of allocated direct labor. So we're using our base for allocated overhead is $100,000 of direct labor. We're saying our total cost of factory overhead is $500,000. So As part of that 500,000, indirect labor is going to be 125,000. Indirect material will be 75,000. Factory rent would be 200,000, and miscellaneous overhead of 100,000. Now this is going to give us an allocation rate of $5 per direct labor hour. Now our direct labor actually has a cost associated with this, and in this example we're using $25 as the example. So we have job 1, 2, 3, and 4 here. So we're saying that in job 1 it took us 2,500 hours or 25,000 hours of direct labor at $25 per hour to give us a cost of $625,000 for that specific job. Direct materials, $350,000 for that job. Allocated overhead rate, 25,000 hours at 500 gives us an allocation of $125,000 is being allocated to that job. So the total cost for job 1 would be $1,100,000. So what I've done here is I've gone through and I've shown where this would flow through. So your first part you would be buying the raw materials that you're going to need. So you would have an accounts payable set up for $1,325,000 right here. And the material, your debit would be, this is what you would be increasing your debit here, or your debit side of the raw materials, which is an asset, by $1,325,000, and you're extending your credit by $1,325,000. So then the next step is going to be taking that material from raw materials, which we're going to do with a credit entry, and we're going to move it over here to goods in process. Because if you remember, we talked about all of the costs that go into a job are brought into here and accumulated here and then flow from here to finished goods and finally to cost of goods sold. Now what I've done is I've basically am saying that each one of these jobs is being completed simultaneously, so that I can, for simplicity's sake, so that I can show you that, okay, we have direct labor hours here of 2.5 million. We have direct material here of 1,325,000, and we have overhead of 500,000. Now, when these goods have completed being in process, they get credited to goods in process and debited to the finished goods account, which means they're ready to be sold. Then when they get sold, they move over to your cost of goods sold, which would then be used against your sales to tell you how much your gross profit for that quarter was. Now, so again, to reiterate what I'm talking about, goods in process, all of your costs while you are manufacturing are all gathered here. Then once those jobs are finished, they transfer out of goods in process to finished goods, and from finished goods to cost of goods sold. So it's really important to know that not all jobs are going to be completed simultaneously. For simplicity's sake, I just had all of these completing at the same time so that it made it easier going across to figure out what went where. Now this will conclude chapter 15. You can reach us at the COLAT Tutor Lab at uab.edu, or you can arrange for a Skype session at COLAT Tutor Lab on Skype. Again, my name is Dennis Brooks, and this will conclude chapter 15. Thank you.